Hello and welcome to Business Daily. Coming to you live from Seoul, I'm Lee Ji-yoon. Before we get started on today's top business stories, let's take a quick look at what you can expect from us in the latter half of our show. Falling Korean exports are getting laid at the feet of the weak yen. How should Korean businesses prepare for further currency fluctuations amid a slowdown in global trade? We tell you how to watch out for a new method of fraud called QR phishing, in which hackers send out text messages embedded with malicious codes. These stories and more coming right up. Anticipation for yet another rate cut from the Bank of Korea is on the rise as the slow domestic economy and the weak Japanese yen continue to dampen future prospects for Korea's growth. This comes as experts predict China and India may further lower their interest rates despite a looming hike from the U.S. and calls for Korea to further ease its monetary policy grow. According to Bloomberg, out of 22 major financial organizations, half of them, including HSBC and Morgan Stanley, predicted that Korea will further lower its interest rate within the year due to sagging exports and poor performance in a number of industrial indices. But some remain skeptical, citing problems like skyrocketing household debt and the potential of a widening interest rate gap between the U.S. and Korea. Korea is looking to extend its loan-to-value and debt-to-income ratios on lending by another year, with both set to expire at the end of July. This is according to the Financial Supervisory Service, which said on Monday the move aims to allow for a soft landing for household debt. The financial watchdog said it will move forward with the extension unless opposing arguments are submitted. The two measures were raised to the same level last year, enabling homeowners to borrow against 70% of their property value, while lenders were able to offer up to 60% of debt to the respective incomes of borrowers. Listed companies in Korea, on average, pay their shareholders the lowest percentage of earnings in dividends. Now, that's according to data from Bloomberg, which found Korea's average dividend payout ratio to be 16.7%, the lowest among 51 countries it looked at. That was more than 50 percentage points lower than the country with the highest dividend payout ratio, the Czech Republic, which had a 72.9% ratio, followed by Australia and Finland. Now, imagine logging onto your banking mobile application one day only to find out you've been misled to a fake website. That's what can happen to some as hackers have adopted a new method called Qshing. What exactly is this? Our Lee Ji-young tells us more about it.
Oh Chang-soo says he's been using a banking app on his smartphone for the past 5 years. That's until his phone was hacked back in April. Oh lost $300 from an online gaming site after his private information was stolen.
The screen suddenly went into camera mode. Then a QR code scanner appeared on the screen telling me to scan my bank security card, so I did.
This new method of fraud is called QR code phishing, or so-called Qshing.
I trusted it because it was a banking app, so I was really taken aback when this happened.
How exactly does it work? Hackers send out text messages embedded with malicious codes. When you try to access mobile banking websites or apps, it redirects you to a fake website that prompts you to download an app using a QR code. This app in turn extracts private information, which is used for small sum money transactions that can later add up to hundreds or thousands of dollars. The Financial Supervisory Service earlier last week issued a consumer alert on Qshing in the face of growing threats that add to existing scams carried out through text messages and voice phishing.
Even if you are logged into your own phone banking app and it requires your security card or any additional information, then you should question whether it's a phishing scam. Do not activate anything and stop your transaction altogether.
The financial watchdog recommends that users take extra precautions, such as downloading a security verification app called PhoneKeeper, developed by the Korea Internet and Security Agency to protect their phones from malicious hackers. Lee Ji-young, Business Daily.
Just about a month ago in our program, we looked into what potential harm the sliding Japanese yen could have on Korean exports. Now, a lot of those concerns have turned into reality as the country's outbound shipments fell by the greatest margin on year in almost 6 years. Let's take a look.
A recent survey of 300 Korean companies indicates well over half are being affected by the weak yen. The country's exporters say the average 1 yen threshold to maintain business is 924 won per 100 yen, but last month the average stood at 908 won. Korea's exports face mounting problems as Japanese companies continue to lower prices. When costs of Japanese goods that are competing with Korean products drop by 10%, Korea's outbound shipments are estimated to shrink by an average 12%. By industry, cheaper Japanese goods are said to deal a heavy blow to food and beverages, as well as steel, shipbuilding, materials, and automobile parts. And with experts predicting Tokyo will continue on with its monetary easing, there are growing calls for increased readiness against the weak yen.
And to tell us more about this, we're now joined by Professor Shin Sang-hyuk of Kyunghee University's Graduate School of Pan-Pacific International Studies. So good to have you join us today.
Thank you.
All right, so as we just heard, Korean exports have been slowing for months. How serious of a problem is this?
Well, it's quite serious. Actually, over the last 3 years, Japanese yen has been, against Korean won has been depreciated by 40%. This means that the Korean competitiveness, Korean products competitiveness in the global market has been weakened, particularly in the competition with the Japanese products. So if I give you some data, in 2014, Korean exports to Japan reduced by 11%. And in this year already, until the end of the April, the Korean export to Japan has been reduced about 5%. So I think it's quite serious. And considering the Japan is one of our main trading partners, I think it can be a direct threat to the Korean national economy itself.
Oh, well, but then we can't really blame the weak yen for everything for Korea's falling exports. I mean, China is increasingly becoming a major threat. So what other factors aside from the weak yen are we seeing it slowing the country's exports?
Well, as you mentioned very briefly, I think the situation happening in Chinese market seems to be one of the most serious threats to the Korean economy. As you know, the Chinese government is making every effort to change its economic structure. Main exporting items of Korean producers to Chinese market have been the so-called component industries. We have exported the huge amount of the components to China, and Chinese producers have used the Korean-made components to make their final products in China. But Chinese government encourage them to produce those components by themselves. Definitely, it can be a fatal blow to the Korean industries. So I think, and also China has been the #1 destination of Korean exports. Considering this point, definitely, well, the changes in Chinese market, it can be one of the most serious threats to the Korean economy. Of course, the slow recovery of global economy in U.S., in Europe, can be another negative impacts for the Korean, factors to the Korean economy, but Chinese situation can be the #1 negative factor to Korean economy itself.
All right, well, going back to Japan, it looks like Japan's going to continue with this quantitative easing program for a while. For how long do you think this weakening of the yen will continue?
Well, it depends on the experts, but I personally I do think that the weak Japan is expected to continue at least 2 or 3 more years. This is based on the 3 factors. First one is the expected increase of the U.S. Basic interest rates and the quantitative easing policy of the European Union. And on the top of these two, Japanese government has announced that they will keep on implementing quantitative easing policy. Actually, they recently announced that they provide more Japanese yen equivalent to 770 trillion won to the market. So I think at least 2 or 3 more years, weak Japan will be continued, I think.
Okay, well, I think right now the biggest problem is, of course, the weak yen slowing down the Korean exports, but also Korean exporters are not really ready. They don't really have the tangible strategies in place to deal with this kind of situation. So how do you think we should ready for any further currency fluctuations?
Well, it's quite a tough question. In fact, regretfully, the Korean companies do not prepare well for this situation, and the Korean government does not seem to prepare well about this situation. But I think in fact, there are not many available the policies to the Korean government. Only one, if I introduce one of them, is that maybe Korea should also adopt the low or the interest rate policy. Well, but this policy brings us another threat, that is the huge household crisis. We have already 1,100 trillion won house debt. If the government adopt the low interest rate policy, basic interest policy, more people want to borrow the money, then more money will come to the market. Then Korean will be depreciated. So by taking this policy, the Korea can minimize the impact caused by the weak yen, but it has another side of the coin, actually. We have to worry about it. Another one is the government should have to improve the efficiency in foreign exchange rate policy. I think this is a few available policy options to the Korean government at the moment. But I won't take the quite positive stance because the Korean government is recognize the problems we have. So I think that if we work together, we will be able to overcome the crisis we are facing, I think.
All right, let's hope to see some of those actions in place. And thank you so much for coming in today.
My pleasure.
That does it for now, but we'll be back tomorrow with more fun and comprehensive business news that matters to you. Thanks for watching, and see you soon.